Welcome to ETF Wrap, your weekly digest of the top stories in European ETFs. This week, the industry saw a widespread reshuffle of senior figures across ETF issuers and fund selectors. Elsewhere, the UK regulator is slowly beginning to soften its hard line on crypto ETNs. And finally, the industry hits back at proposed cash penalties for ETF settlement fails. First, a busy week on the people moves front as a number of senior ETF figures sought out pastures new. On Monday, ETF Stream revealed DWS Global Capital Markets head, Keshava Shastri, is set to depart after a decade at the firm. An industry source said he'll be replaced by current DWS European Capital Markets head, Jamie Hartley. Next, ETF Stream revealed 7IM Senior Investment Manager, Peter Sleep, will depart next month after 17 years at the firm. Sleep, whose replacement is yet to be announced, had a founding role in the wealth manager's AAP funds range and led its discretionary passive funds offering. Elsewhere, David O'Neill was named CEO of Ireland-based Han ETF EU. Meanwhile, crypto specialist ETC Group appointed Ronald Richter as Director of Investment Strategy and Wendy Langridge as Chief Regulatory Officer. Next, the London Stock Exchange will begin accepting Bitcoin and Ethereum ETN applications in Q2 after the FCA greenlit professional investor access to the products. The UK financial watchdog said it will not object to requests to list crypto ETNs on regulated exchanges. However, crypto ETNs must be physically backed, non-leveraged, and only offer access to Bitcoin or Ethereum. Despite the change, the products are still only available to professional investors in the UK, with the 2020 ban on retail investor access remaining in place. Finally, leading investment bodies have hit back at proposals for progressive cash penalties to be introduced for settlement failures under the Central Securities Depositories regime. If introduced, penalty rates would rise from 2.5 basis points on day one to 12.5 basis points if ETFs fail to settle 6 days after the intended settlement date. Responding to the proposal, the Association of Financial Markets in Europe said the primary impact of the penalties would be to increase costs for ETF investors. Instead, it said the focus should be on addressing the structural barriers to timely settlement. And that's a wrap for this week. Thanks for joining us and hit subscribe to keep up to date with all the latest in ETFs. Until next Friday, take care.